back. You're watching The Money Show with me, Kavita Thapliyal. And when it comes to taking a credit card or a loan, your credit score is the biggest criteria that is factored in by banks and other lending institutions. But how can individuals build a good credit score? What can be done to improve your credit score? Let's understand all of this with Harsh Roongta, founder of Only Investment Advisers LLP. Harsh, good evening. Welcome to the show. And we've been doing this topic time and again, and every time we do it, it sounds and it looks very relevant because there's so much that people need to know about it. First of all, let's start with a very basic question. What exactly is an individual's credit score?
So, credit score is like a grading exam. I mean, all of us, when we've gone through our exam, we will keep submitting papers, and at the end, the examiner will sit and give you a mark. In this case, these marks come out of 900. The marks come from what are the papers you give. So, any borrowing that you would have made, the borrowing could be a credit card is a borrowing, so it could be a credit card, it could be a car loan, you could have taken a appliances loan, you could have done this. Nowadays you get this buy now pay later kind of online things where you can buy show tickets, and you can take loans as low as 10,000, 20,000 rupees. Everything, please remember, is getting registered by law. The person who gives you that loan, the entity that gives you that loan, is required to share your track record with what are called the credit information bureaus. There are 4 licensed credit information bureaus and every person who lends money in the formal lending sector needs to share your track record. How much loan did you take? What was your repayment track record? That goes to each of these 4 institutions. They process it, and next time when you go to borrow, then the prospective lender will ask one of these 4 agencies, okay, tell me what has been this person's track record. And that's where that credit score comes out. They use all these records. They use other records that are fed in there in terms of your address, in terms of income, permanent account number, all that they will feed in and give a comprehensive score. What that score indicates, the higher the score, so if you're 900 out of 900, nobody I think is, but if you're above say 750, then the probability that you will repay the loan on time is very high. That's what the score indicates. If it is less than 750, let's say it's 650 to 750, the probability is still good, but it is one notch obviously below 750. And then so on. And below 650, it gets into areas where, the doubt whether you will repay on time based on your past track record. I think this entire thing goes on your track record of repayment. When people give loans, there are 2 things they look at. One is your ability to pay, which comes from their analysis of your income, etc. Second is your willingness to pay. Having money, will you still pay? And that willingness, to a great extent, is judged from the credit score. Have you paid in the past? If you have paid in the past, the chances are that if you have the money, you will pay in the future. And I think, therefore, and access to credit today is literally a fundamental right. And therefore, your credit score is extremely important. Watch it. Everybody is entitled to one credit report a year from each of these 4 agencies. Make sure you download your free credit report. Make sure you see if there are any errors in that. If something has not been captured properly, make sure you report it back. It has a huge impact on your ability to borrow money in the future, and ability to borrow money essentially adds to the quality of life that you are able to lead in the future.
Harsh, does that mean that only your inability to make the payment on time actually hampers your credit score, or there are other factors also?
So, I mean, ultimately, anything that leads to your inability to pay. So, one is obviously in the past, if you have not paid, that's a clear red signal, and that will reduce your score. Other things could be, so they also take, so there are what they call high impact factors, there are medium impact factors, there are low impact factors. Among the high impact factors, the biggest impact by far is if you have not repaid something on time. Okay. If there is a default showing and it has been showing for some time and you have not settled it, that by far is the biggest impact. But other things could be if you are shopping around in the market for unsecured loans, and that it allows you to take, say, 50, I mean, you can take multiple unsecured loans from parties. And if you have many inquiries, those are called inquiries. Whenever you inquire, that person, whenever you ask for a loan, when you shop for a loan, say from multiple people, especially unsecured loan, then they always inquire with some uh, credit bureau or the other, and those inquiries are also captured as to how many inquiries are happening. And if too many inquiries are happening for unsecured loans, or say for credit cards, which are effectively unsecured loans, then that also has an impact on your credit score.
All right. So now let's talk about improving your credit score. It's very important for everyone to get their credit score report at least once in a year to keep a track of it. But what if you have a poor credit score? First of all, what exactly is a poor credit score? 750 and above, I think, is considered to be a healthy credit score. But what if you have the score that's below that? And will the banks inform you about it whenever you go to apply a loan? Because otherwise, you'll have to take a statement yearly and just figure it out on your own. But how can one figure that out, and how can one improve it?
So first, if you're taking a loan, applying for a loan, and they are downloading a credit score on your application, they're required to give you a copy. But I think far easier is you go download it yourself, okay, rather than depend on the bank, because the bank, not every information is disclosed to the bank, especially in terms of whom you have borrowed from. Whereas when you go as a borrower to the Credit Information Bureau directly, you will get all information. So the report that you get as a borrower is far richer than the report that the lender itself gets. So therefore, try and get it yourself. It's available online. It's very simple. So do get it yourself. Now comes the question you mentioned about improving it. Now, so improvement can be of two kinds. If it is below 650, you need improvement. If your credit score is below 650, one, it will take time probably for you to get a loan. More importantly, it will cost you far more to get that loan. Whether it is a home loan, whether it is a car loan, whether it is a personal loan, you pay a far higher price. Plus, it might take you much longer to get your loan. So how do you improve? So one is, why is the score low? The score normally, when you start off, you have never borrowed. Think of a person who's starting off his or her, journey into being an earning adult. At that time, they've not borrowed anything. I mean, the American culture where, people already have credit cards by the time they are still in college is still to pervade. They don't have their own credit cards. They might have credit cards given by their parents. But they may or may not have their own credit cards, which means they may not have any credit score. So that is sort of it's a low score, but that is a low score because you have not taken any money. Improving that is simply take money responsibly, okay, and so if you are taking, say, a credit card, make sure you spend only on what is needed. Make sure you pay back 100% well before time, and I think over time that score will improve. So this is a case where there was no score effectively, and you built a score by creating credit, using it very responsibly. And I think that is very, very important. The second part is where the score is bad because you have defaulted in the past. Now, if the score is bad because you have defaulted, please realize one thing. Improving it is not a one-day affair. It is going to take time. Spoiling it took little time. When you didn't pay, it got spoiled. Rebuilding it is going to take time. First, settle all outstanding dues. Go talk to the bank, settle all outstanding dues, get letters from them, specific letters saying that it has been settled. Banks have discretion in terms of what remarks they will put in the credit bureau. They can say that it was, settled without write-off. Okay, and I think that, in the sense, that implies that probably there was some dispute about the amount of overdues, and I think that kind of a remark has a good impact on your credit score, although it again takes time. So first do that. Second, rebuild it slowly, as I said. You will be able to get credit cards with, say, fixed deposits. Take them, spend only on what is needed. Slowly build up your credit score again, and slowly it will start coming. Nowadays, of course, you have even people with lower credit scores are able to get even normal home loans at higher rate, definitely. Or you can get loan against securities, loan against your shares, loan against your bonds, loan against your national savings certificate, loan against life insurance policies, gold loans, jewelry loans. Just take those loans provided you need the money, and make sure you repay well on time, and slowly over years. It will take you, if you have spoiled your record by non-repayment, it will take you at least a couple of years of good repayment track record and settlement of old dues before you will come in an acceptable range in your credit score.
Also, having more than 2 3 credit card impacts your credit score, because inability to pay, credit hungry behavior, all that is tracked. But then having more than 2 or 3 credit card, which a lot of people do, does that also impact?
Uh, well, the answer is yes and no. If you have too many of them, it will definitely impact, because it shows that you are, having access to so much unsecured credit which you can draw at any time. Having said that, they will also look at, how much of the credit you are utilizing. So, unutilized credit also shows that you are not as credit hungry as, and if that is over time, if those 2 3 cards are like with credit limits of, let's say, 2 lakhs, yet the highest utilization is, let us say, 30,000. Okay, then it may not have that bad an impact having multiple credit cards. But multiple credit cards is never a good idea. I think more than 2 cards, I can't really see any reason why you would ever want to have more than 2 credit cards.
There has to be some kind of a discipline even when you are using credit cards or anything like that. But then, last question to you: there are a lot of agencies that offer the service of getting your credit score rectified. Does it make sense to go through these agencies, or you should just go to the bank and have a good credit behavior and just get it sorted organically?
So unfortunately, I think world over, credit repair agencies, they are called credit repair agencies the world over. And in many jurisdictions, they are regulated. Unfortunately, in India, we do not have regulation. I think a good credit repair, a good credit repair agency that helps you improve your credit score, that helps you rebuild your credit score after a default, that negotiates with the bank on your behalf, is worth, a lot of, it is really well worth it. The only real issue comes in how do you distinguish between a good credit repair agency and a not so good one. I think this is definitely, now that we have many Indians who are borrowing and a lot of them are defaulting and realizing that they need to rebuild their credit scores. This is it's a growing industry, and I think if it is regulated, it will be good for them, because then the more professional ones will be able to market their services.
We've covered almost all aspects of building a good credit score and improving your credit score as well. On that note, thank you so much, Harsh, for being on the show and helping our viewers with this. We will take a quick break, and then after that, let's talk about your portfolio strategies and your portfolio investments. Let's get this sorted by Pankaj Matpal after this break.